Hey everyone, welcome to Inheriting the Future, the Noyak Wealth Club podcast, where we chat with experts to share ideas and tips for you to help you build wealth for the life you want. I'm your host this week, Anwar Adam, and I'm thrilled to have Noyak CEO and frequent guest CJ Follini back with us. Today we're diving into Noyak's annual millennial money predictions for 2025. What trends will shape your money management this year? Let's peek into what's coming so you can learn and even get closer to achieving your money goals for 2025. And before we get started, make sure you subscribe to the Noyak Wealth Weekly newsletter with either the link, which is going to be in the description of this video, or by scanning the QR code. CJ, welcome back to the podcast. It's great having you here.
Thanks, Lauren. It's always great to be back, and love chatting with you about financial education topics.
Let's kick things off with a quick look back. How do you think you did with last year's prediction, CJ?
Well, looking back, I'd give myself a solid 7 out of 10, or if you're thinking of an old school grade, maybe a B, possibly a B minus. Some predictions, like the rise of alternative investments and the growth of crowdfunding platforms, they were spot on. Those trends really took off in 2024. Also, I predicted that real asset investments would return to stability, and that did happen. Their income no longer being eroded by 5, 6, 7% inflation. So that was good for anyone who believes in both alts and real assets, whether it's collectibles, real estate, etc. But I definitely missed some things. For example, retail investors did not abandon the stock market. In fact, it was the opposite. They had some of the greatest involvement in the stock market, which is why some people think we're actually in a bubble, Anwar, right now at the end of the year. I'm not going to give my prediction or my feeling, my opinion on the stock market. I really don't talk about stocks, but there's definitely validity to where about the inflated values of the stock market because of the involvement of the retail investors. So I got that one wrong. Let's see, what else? Newsletters? I think I nailed that one too. Newsletters were everyone. In fact, who doesn't have a newsletter, right? We have one, Noyak Wealth Weekly, shameless plug. Oh, AI-powered wealth manager. Well, I still think I'm positive I will be right. I just wasn't right on that prediction in 2024, which is why I'm bringing it back for 2025, but we'll get there. So yeah, I'm going to go with a 7 out of 10, and maybe I'm an easy grader.
Got it. That sounds like a fair assessment, CJ. Let's move forward now, and let's talk about what's in store for 2025.
Great.
Got it. And CJ, this year, like always, you have 10 predictions for 2025. And let's start off with your first prediction, which is on AI-powered investing. So CJ, you've highlighted AI's impact on investing. And now, Can you please explain how these hyper-personalized portfolios will change the game for millennials?
Absolutely, Anwar. First, as you can see, this is my first prediction because I don't like to give up, and I don't like to lose or be wrong. So just as I was saying that I was dead wrong about an AI-powered automated wealth manager for 2024, I'm doubling down for 2025 and leading with the role that AI is going to provide in all aspects of both institutional wealth management on behalf of others, meaning registered investment advisors, and ourselves who like to DIY our own wealth management. We're going to be using new AI tools to make financial decisions for our own money. Now, I've learned a little bit more. I go to so many conferences and I talk to a lot of experts. Another shameless plug, we're building our own personal wealth management tool, but it's more of an education, not a manager. It is really just to guide you as a co-pilot. So what I'm seeing is that there's going to be not a broad-based AI involvement, but really a hyper-personalization. For example, AI uses vast data sets to craft strategies that aren't just tailored to risk tolerance, but dynamically adapt to life events. So if you're a believer, as I am, in goals-based investing instead of focusing on the financial metrics, then how AI is going to be used by financial institutions and personal wealth managers is going to be just for you. Because, for example, if someone's saving for a wedding, the AI co-pilot could shift the advice, shift the responses about their investments and their portfolio construction to lower risk assets as the wedding date approaches. So, and it also could become more liquid in its suggestions. So it's not just about the convenience of an idea like that. It's about the precision and ensuring that you can hit financial milestones with less stress, more confidence, and you have like a friend with who's guiding you, his or her arm around your shoulder, providing you advice and insight. It's going to make everyone. I think confidence is a key word. It's going to make all decisions. You're going to be making decisions more confidently, and usually when you're not indecisive, those confident decisions have a higher probability of success. Does that answer why I believe that AI is going to personalize and revolutionize investing?
Oh yeah, it totally does. I think, I can relate, and we can all relate to what you just described over there, how the benefits of it we're just too early for it now, but in the longer run, it's inevitable.
Think of any goal, whether it's buying up a first home. As I mentioned, I use the example of planning for a wedding, retirement planning. Oh my gosh, it's going to take over retirement planning, which is going to make some investment advisors not so happy because they may be disintermediated by the productivity of AI, but it will change how retirement planning is accomplished right now. That is what I mean by revolution. All right. So I went straight into the AI for number one, doubled down on my miss from last year. Let's keep going.
Yeah. So moving on, CJ. Now let's dig into tokenized funds, and how they're redefining investing. So CJ, tokenized funds are a buzzword for 2025. What opportunities do they unlock for investors?
Well, I mean, it's about fractional ownership. It's about democratization. And it's about alternative investments. Now, all of those things we have discussed as trends for probably 2 years now. Last year, they were both crowdfunding, fractional ownership, the increased adoption of alternative investments were all predictions of mine, ones that I'm saying came true. But what's going to accelerate each of those and combine them is doing it on chain. Blockchain enablement of fractional ownership with smart contracts that ensure transparency and efficiency. Plus, there's round-the-clock trading, not that alts are really traded like a stock market, but imagine the holy grail of making illiquid alternative investments more liquid, not truly liquid like securities on a stock market. That's many, many years away. But tokens, fungible tokens, that have what's called ERC smart contracts embedded that detail each of the elements of a transaction and how it happens, any contingencies, any compliance. You can even embed KYC, which is know your customer regulations from the SEC. You can embed those in the tokens as well. So it cannot be transferred one token to another person until that KYC, know your customer compliance is met. Amazing. So achieving liquidity or even a measure of liquidity for private investments is going to blow open the door on alts. And every prediction that says this will be the year of the alts, well, once fungible tokens can be traded for fractional ownership of a private investment, that really will be the year of the alts.
Great, thank you. And now going to your third prediction, moving on to your third prediction, which is on millennial investing. DIY investing is skyrocketing. How are millennials leveraging technology to manage their finances independently?
Well, let's see. I mean, we've already talked about two that aren't even here yet, and the AI powered, the AI wealth manager, and blockchain liquidity or blockchain token representation of private investment ownership. But that's the future. The current state is already, there are plenty of tools. There's education There's online education tools to teach yourself financial literacy, financial education. Teach yourself how to trade options, how to invest privately in alternative investments. And then, of course, there are the robo-advisors. And now robo-advisors, you can set up a retirement plan in literally 30 seconds online. Again, shameless plug disclosure. You can do it on our platform. You can trade stocks, fractional shares of stocks on Robinhood, Wealthfront, M1. You can access alternative investments online. Us, Yield Street, Fundrise are the three known retail asset managers. There are tools like Monte Carlo simulations where they allows you to test investment portfolio strategies. So you can input all the different asset classes of a sample portfolio, maybe one you're considering or one you have, into these online tools, and they can run all type of sensitivities based on interest rate, price rise, employment rate, all the different known indicators, and give you an idea of how sensitive your portfolio is to a variety of external circumstances that could happen. Even a black swan event they can test. So I'm going to call the DIY investing movement the democratization, a very overused term, and I'm now contributing to that overuse, the democratization of financial knowledge. Because tools plus the education, they break down the intimidation factor that's kept younger investors on the sidelines. And really, the only people who profit when younger or any investors don't empower themselves are the gatekeepers, the people who want to make you think you need them in order that you can't do without them in order to access wealth, manage your money, get a retirement plan, get a 529 plan for your kids' college future. Those institutional gatekeepers need you to believe it's a black box. Democratizing financial knowledge opens up the box and you take it.
Thank you. And moving on to your fourth prediction now, which is on goals-based investing. CJ, you mentioned that millennials focusing on goals-based investing. Why is this a shift significant?
Well, let's see. So goals-based investing was very popular a while ago. I believe it was about late 90s. I was there, as you can see from the lack of hair. I have a few years under me. I'm not even a millennial. I'm definitely older than a millennial. Goals-based investing was very popular. It had a moment. It was a movement. And really what it means is that you align your portfolios, your investments with what you want to achieve in life versus, hey, I want to hit a 10% return metric. I want 5% on this. I want 4% interest. Instead of focusing on the numerical metrics or money for money's sake, you say, you know what? I want to invest so I can buy a home. I want to invest so my family's secure, so I don't worry about what happens in case I'm not here, whomever I is, right? I want a retirement. I want a retirement at this age, and I need to start planning now. So what do I need to do that versus instead of focusing on, hey, how do I get 6%? That's what goals-based investing. And it's a mind shift. It's a mindset shift, Anwar. Traditional investing always prioritize the returns, the numerical returns. But younger generations like millennials, Gen Z, they don't think that way. And now that earlier movement of goals-based investing is back. I see it everywhere. Even banks like Bank of America and Citibank, they don't talk about how much money you want. They talk about what do you want in life. They ask, what is your why? Why are you investing? Why do you need to invest? So understanding your why is understanding your goals and then how to do goals-based investing. So that's the first step. Understand why you think you want to invest. What are you trying to accomplish in life? And it's more of an emotional connection, which, I think historically a dispassionate, rational approach to money has always been preached. I mean, Warren Buffett will be the first to say that. But so many studies, and we did a 5,000 cohort study that show that people investing for clear goals does outperform those who chase market numerical returns. And that's really all you need to know. It's more successful. And that's why there's the strategy and the style is back. And I think it's here to stay.
Great. I can actually relate to that, CJ. Coming from a Gen Z audience myself, my shift has changed, from because when I first started off my investing route, I used to think about the numerical way. But, as I got a little bit more matured, and the way I have thought about investing has completely shifted towards having a goal setting mindset, where now I look at things at a bigger picture rather than chasing numerical values, where
Yep.
I feel like it has just been more easier on the mind as well, and where you have less pressure and you're actually able to think rationally when it comes to making, financial investments. And I can totally see this, and I'm seeing the shift, personally with around my friend circle and my colleagues around me, who are
So
Gen Zs and millennials.
if you've discussed it,
Yeah,
then what is the number one goal you see? Is it retirement? Is it family? Is it legacy, aka philanthropy? Is it just diversification, which is more of a portfolio goal? What do you see as the common goal? What is your goal? What is your most important goal? What is your goal priority? And what do you see from your friends? Which one
for sure.
of those are someone I haven't mentioned?
Yeah, for sure. I would say retirement is too far of a fetch. One thing most millennials and Gen Zs are chasing now is on buying their dream home. For example, in my friend circle or anyone who are around my age, they're trying to invest it in a way that way they can have a they can move in and actually own a home, because it's the past decade or so, it's almost like the American dream of buying a home and starting a family has been, becoming more and more of a myth rather than a reality. And that is the
Interesting.
one thing that most millennials and Gen Zs are looking forward to. Retirement, they're not too concerned about it at the moment, but home is their first step, and then after that, going after retirement.
I'll push back on that last one. Millennial is a giant generation. I do think that the older millennial, the
Yeah.
35 to 43 part of the millennial generation, definitely I would say retirement might be, number one.
Oh yeah.
But the 23 to 32, where you are, younger millennial and cusp Gen Z, aka Zillennial, definitely I think home, whether it's a condo, your first domicile that you own, building wealth, which is still today the first and most important way to build wealth is through your first home ownership. So I can see the bifurcation between retirement and home, but those are definitely top two, 1 and 1A. Yeah, I actually love goals-based investing, and I'll give you a little quote. My favorite economist, Milton Friedman from the University of Chicago, he once said that if you strive to make money for money's sake, then you're a fetishist of little green paper. And I love that quote. And I do believe that that's really that quote, which I think is like 40, 50 years old. I believe that's the beginning of where goals-based investing came from. That was the inspiration. And the premise is, don't make money for money's sake. Make money for life's sake.
Great. So moving on to your fifth prediction, which is, I think it's something you love talking about,
Oh my
alternative
God.
investments. And I know I can just see the excitement in your eyes.
I'm the
Anytime
alts guy.
you are the
I
alts
walk
guy.
down the street, they're like, hey, there's the alts guy.
Yeah. So CJ, why are millennials turning to alternative investments like venture capital and fine art?
Great question.
Okay. So
Okay.
CJ, so yeah,
Go.
moving on to your fifth prediction over here.
Yep.
Your favorite topic, alternative investments.
Like I said, when I'm walking down the street, they're like, hey, that's the alts guy. Yes,
Yep.
it's a big favorite of mine.
For sure. And so CJ, why are millennials turning to alternative investments, especially venture capital and fine art?
Okay, great questions about the specifics. Listen, millennials are recognizing that traditional stocks and bonds, we just had an inflation surge over the last 2 years. People got crushed. Bonds were getting crushed, and if your stocks, real assets, venture cap, everything dove, and a lot of times they also find out that the companies. Remember when Nike was exploiting labor in Southeast Asia? a lot of the companies that they're invested in don't align with their priorities or their values.
All right. So moving on
Moving on.
to your fifth prediction, Steve. Your favorite topic, alternative investments. And you are so passionate about it. And I think they often refer you to the alts guy.
I walked down the street, though. There he is. That's the alts guy.
Yeah. And CJ, why are millennials especially turning to alternative investments, like venture capital or fine art?
Well, listen, we talked about the adoption of alts being one of the predictions, and it's happening, and it's really accelerating every year. But specifically, why venture capital and fine art and other collectibles? Well, it's a great question. Millennials now recognize that traditional stocks and bonds just don't always align with their priorities or their values. Plus, there have been financial scandals in the public markets. Sometimes they learn that there are companies that are exploiting labor in Southeast Asia. I won't say the name, but it rhymes with bike or bikey. And alternatives like commercial real estate, art, or venture capital offer diversification and a sense of purpose because they love art. They know founders. They want to be a founder, so they understand private equity and venture capital. And plus they're more resilient to the market because they don't allow you to trade in and out. And investing is a lot better than trading when you're an individual. So managing your own investments, they're more resilient to market volatility because you can't jump in and out of an alternative investment. They're illiquid, and that illiquidity, while usually a negative, is actually a positive when it stops you from damaging yourself with your own impulse of indecision. So whether it's supporting these startups or investing in climate resilient infrastructure, it's not just wealth building, it's values-driven investing. It's values-driven wealth building. That alignment of passion and return is paramount to younger generations. And that's why alts are surging. Listen, I'll leave this prediction with the statistics. My generation, Gen X, the average allocation to an individual's portfolio was 6%, right? Next generation, albeit a giant one, millennials, they're already at 20%, and Gen Z is going higher. So from one generation to the next, we went from 6% to 20%. So obviously, there is feelings there that are continuing unabated, and they're accelerating.
Yep. I can totally see the shift happening, at this very moment. Moving on to our sixth prediction that you have, which is on social media shaping financial decisions made by, just investors. So CJ, social media is, redefining financial advice. How should millennials navigate this landscape?
This is tricky. I'm a little conflicted about this. One, I made the prediction. I think it's an easy prediction because it's already happening, but I think it's also accelerating, and I think the general public is going to become aware of it. So it's really something. It was an easy win when we get to 1 year from now, because for the insiders, we already know that financial influencers, are a thing. The reason I'm conflicted and it's tricky is because social media platforms like TikTok, if it remains, and Instagram are filled with advice from people who have no qualifications or credentials or experience even. All they know is how to edit good video. But there is also very highly credentialed, experienced, educational influencers who, because of those platforms existing, are able to disseminate very needed financial education, a lot of which doesn't exist in our school systems. They're able to get it out there to the public because of those platforms. So that's why I'm conflicted. On the one hand, I love the accessibility of the quality financial advice, or not really advice, we know that's non-compliant, it's not advisory, financial insights and education that come with people like certified financial planners or certified financial analysts or just experienced people. But I'm also nervous about the dark side and the people who are scammers. So this is an easy win for me in the prediction column, but I'm also conflicted about its impact. So let's all be careful. Vet the people you're listening to on social media. Avoid anything that sounds like you can get rich quick. Forget it. There is no get rich quick. You know, I always wanted to do an Oscar speech, not that I'm ever going to be able to, but my Oscar speech would be this. Thank you very much. Thank you very much for making me an overnight success after doing this for 35 years, because that's what it takes to be successful. So when anyone says get rich quick, you say bye.
Absolutely. Yep, there's a lot of, I think especially Instagram, it's just flooded with all sorts of people just scaling up to thousands of followers and, user base and promoting content that ranges from where financial advice to giving them exclusive access to information. But as you mentioned, there's a huge dark side that a lot of people are not too aware of, or they often just ignore it. But they don't know that just one small involvement with following an advice of such kind could vastly impact their investment portfolio or their lifestyle.
Yeah, I mean,
in a
you could
negative.
use the Pareto. You could use the Pareto principle. There's 20% of what you see online of financial influencers, finfluencers. Again, that's the term. That are great, and I hope there's a way to amplify them. But the algorithm doesn't evaluate the social media algorithms. The meta algorithms don't evaluate the quality of the discourse and the quality of the financial education. All it evaluates is engagement, clicks, likes, and so on. And sometimes the lowest common denominator of content is what gets engaged with. And then, bad stuff gets emphasized and amplified. And that's why I'm conflicted. So if we could find, and truly, if you can individually identify that 20% that's really good, I would make it 80% or 90% of what you listen to and forget the rest.
For sure.
Okay.
Great. And now moving on to your seventh prediction over here. Hybrid advisory models sound innovative. What's the appeal for millennials using this?
Okay, so this is a tricky one for me because one, I'm not a financial advisor. I don't pretend to be one. Yes, I have 40 years experience in personal wealth management and alternative investments, but I actually see the value of, I have a personal wealth manager, but yet I also am self-directed almost all the time. So this is sort of me looking in the mirror and saying, while I'm always about teach yourself, to empower yourself, to DIY your money management, I do recognize the human value of having another set of eyes, someone to bounce ideas off. Even if you had an AI-powered portfolio builder and it gave you a suggestion, I would still run it by a personal advisor because there's other considerations. For example, they bring a nuance to your decisions of buying a home or planning for a family as a human advisor, and with their emotional intelligence, that there is no technology that can do that. The technology can evaluate the data, but the data may not speak to you personally. And that's where, if you combine in a hybridized way, the technology you use as tools with the insight and guidance and friendship you gain from a human advisor, I think that's the best possible solution for yourself. And I'm all about DIY, but I'm still advocating a hybrid approach.
I think that is great prediction right there. And moving on to your eighth prediction. I think we chatted a little bit about this in the past, in this podcast over here, which is on retirement and millennials.
Oh, you disagreed. You said it wasn't number one. You said that, although I hedged my bet on the prediction, as you can see, I didn't say it's number one. I just said it deepens. So I do believe that retirement is most important amongst millennials, but there's a separation. Millennials are a massive generation.
Yeah.
I mean, think of it. 21 to 43. That's the millennial generation right now. Or 20, no, sorry, I got that backwards. It's 23 to 41. Sorry, I reversed it. 23 to 41. But imagine going to a party and imagine seeing a party of 23-year-olds. How many 41-year-olds are you think are at a party of 23-year-olds, and vice versa, right? Not at all. So they don't mix much. So while you might be right, well, first state, what is the prediction? Let's at least tell everyone who's
Oh,
watching
of
what the
course.
prediction is.
Yep, yep. So now the question for me that I had for you was
Yeah.
retirement planning is a growing trend. And how are millennials actually prioritizing it in 2025?
Well, first of all, I'll finish what I was saying, in
Yeah,
that you think they don't. You think
yeah,
that buying a home, which absolutely, and I think they're really six of one, half dozen another. I think they're 1 in 1A. Buying a home, planning for retirement. I will say this: younger millennials, and I mean 23 to 30, 23 to 34, 35. Yeah, I bet home ownership is probably paramount to their consideration in building wealth. 34 to 41, 42-year-olds, I would say retirement planning has become number one on their goals hit parade. How are they doing it? Well, let's see. Um, they're getting solo 401ks. They're looking at the famous Peter Thiel example, who put all of his worthless PayPal shares when he was just a startup into his first year as a Roth IRA, and of course it became PayPal, and all of that appreciation, $4 billion personally, came out tax-free in his Roth, and that's the famous example. And so people are following that example, especially with the rise of venture capital, and everyone wants to be a solopreneur or a side hustle or found their own enterprise. Then thinking about retirement early is critical. The tools, well, it's also easier to do online. We have a retirement plan setup tool. There are several others. Companies are sponsoring a variety of retirement plans more than ever, and they're matching the contributions with and adding financial education. So what people have learned is, the earlier that you as a millennial, the earlier you start, the more you benefit from compounding. It sits there, interest, dividends, they compound. You have more money, it's invested, that compounds, and compounding is a very powerful, popular topic, from Warren Buffett all the way to every financial influencer that we just talked about on Instagram. The word compounding is the number one topic, probably one that we should talk more about, by the way. So I'm adamant that the number one topic every millennial will talk about when it comes to wealth management is retirement.
yeah. I actually agree with it. When I was mentioning to you, I definitely thought about people who are closer to my age, but then you just broadened up my eyes by, saying the millennials, reiterated that it's such a wide age group where, you have like, young, people on the borderline of Gen Z and millennials like myself. And then you have like, the more mid 40s and like early 40s individuals who have, who probably have a family if they have one, or, who are like middle into the career where their priorities are different. And yeah, I now, thanks for teaching me actually. And I hope our audience got that too.
Hey, did you open up your solo 401k or Roth IRA yet?
I did. I actually did. Yep. Roth IRA,
Congrats.
401k. Yep. Pretty much maxing out as much as I can, just so
Great.
I am set for retirement.
Smart.
Yep.
Let's see.
Great. And moving on to your ninth prediction, CJ, philanthropy. So millennials are reshaping philanthropy. And so CJ, what is driving this trend?
Values. Listen, we've talked about it before, impact, and I mean values and the importance of impact. These are generational behaviors. This is not unique, but it is very strong in millennials, not so strong in Gen X, by the way. And millennials are deeply committed to causes like social justice, education, climate change, sustainability, hence the ESG movement. It didn't happen during when Gen Xers were the majority. But again, when you have wants, and the survey, and you have the behaviors, and you have people who want to do something matched with the tools to do that, that's when things really accelerate and blow up. So there's digital platforms like GoFundMe, Donors Choose. It's incredibly easy to integrate your charitable giving into financial plans. For example, there's a donor advised fund where you could take highly appreciated stock, or alternative investments, put it into a donor advised fund, continue to manage those investments on behalf of a cause you believe in. So you will be in control of how well this money or investment performs on behalf of the cause you believe in and what you want to happen. I mean, listen, 58% of millennials approach philanthropy strategically, not randomly. They're not just seeing it as a way to, it's not just a donation, but it's a way to create meaningful long-term impact while aligning with their personal values that we just described before.
Great. And now moving on to your 10th and final prediction, CJ.
Oh, God, this is going to hurt.
Yeah, this is more into sports, especially Stanley Cup. So,
Okay.
CJ, your sports predictions are bold. And why do you think the New York Rangers will miss the Stanley Cup again?
Well, it's not again. I was being definitive that they will definitely not win. Yeah, I was close last year. This is the repeat of my number 10 prediction for 2024. They suck. And listen, I'm a diehard, lifelong Ranger fan since the mid-'70s. Yes, I just aged myself. And while it's funny, it's also really, it hurts. A little sad how bad they are, because I love them. And when you talk about passion, aligning passion, values with what you think about wealth and money, well, this is one of my passions, and I spend money on going to see Ranger games that I share with my sons or with friends. And unfortunately, they're terrible this year. And so this is a prediction that I'm putting already in the win column for the end of 2025, is that I know the Rangers will definitely not have the Stanley Cup. So I have at least 2 predictions out of these 10 that are locks, guaranteed. So I had to do that so I didn't look so bad. But this has been fun. Thank you. And unfortunately, yeah, I don't think I'll make next year's number 10 the Rangers again. I'll come up with another one that's more fun-centric.
Got it. Thank you. Thank you so much, CJ. And so, it was a pleasure having you here. And, your top 10 predictions are unique and bold. And, and let's just see how the next year we'll meet back again here next year. And let's see how you do well.
Great. Listen, it's been great. Thank you for your time. And yeah, I love doing these predictions. And I hope someone gets a little bit of looking around corners, and maybe they start to do something because they think that it's going to happen, and it helps them. And that's all we care about, is providing financial education and access to the type of investments that change lives. So, hey, thank you very much. Let's see what happens, and Happy New Year.
Yep. Happy New Year, everyone. And yeah, thanks everyone for tuning in. And yeah, that's a wrap for today. And we hope everyone has a great 2025 and spend some great time with your loved ones and families. And we'll be back again next week with a new topic and great experts.
Subscribe to the newsletter, everybody. Noyak Wealth Weekly.
Yep.
Website, wearenoyak.com. Wearenoyak.com, Noyack. Noyak Wealth Weekly. 160,000 subscribers. Woohoo!
Yep.
Subscribe and learn.
Got it. Thanks, everyone. And yeah, and subscribe to our newsletter and the YouTube channel to be up to date with all our expert insights and great experts that come across and share topics that will greatly impact your future. Thanks, everyone.